Hey everybody, and welcome back from spring break, however you chose to use your time. For me, it was just another week. So I'm sure it was for many of you as well. So we're back at it. We are up to chapter 12, and we'll talk about that in just a minute. One thing I want you to note is that in your if you look at your grades, you're going to see something called midterm grades. And it gives you an idea of where you're at this point in the class based on the things that we have graded so far, which is about 55 out of 100 points. That means there's 45 out of 100 points left. And the other thing to keep in mind with that is that we have the final test. That's optional to you, but it's literally extra credit. So those points could be added on. So take a look at that. If you have any questions, please let me know. If you want to discuss where you're at, I'm happy to do that. Just send me an email, D12, with 3 times you can meet, and we can talk about where you're at this point and what we can do to get you where you want to go by the end of the class. Okay, so with week number 10 coming up, we're going to cover chapter 12, and let's talk about that. We'll talk about that as well. Here, hang on. I'll open up the text. Now, chapter 12 is a continuation of the idea of capital budgeting, which we started taking a look at a couple of weeks ago. It's the longer-term view, or the way we would look at evaluating projects from a financial standpoint, and look at the analysis that's done with it. So this one kind of hits right at the heart of it, to be honest with you. So it's chapter 12 is about the budget and capital budgeting decision. So in a couple of things I want to point out here is, one is I'm just going to do a little takeaway. You're going to be presented with several different methods or ways you can potentially do this kind of capital budgeting decision making. But the reality is most firms use some variation on net present value. Because it's a good way to compare like projects and make a decision on which one you actually want to pursue. Internal rate of return is used, but not quite as frequently, and the other ones like paybacks and things like that are not honestly used all that often. So maybe in smaller firms, but not in more established firms that use financial analysis on a regular basis. So anyway, that's the way to look at that. So what you want to take away from this chapter is to show how a capital budgeting decision represents a long-term investment decision. It's a matter of time frame more than anything. And then you want to recognize that cash flow is used rather than earnings in making capital budgeting decisions. And it's very well explained in the book, but it'll make sense to you when you read it. But cash flow is the basis by which these capital budgeting decisions are made. You want to be able to understand that the payback method considers the importance of liquidity, but ultimately doesn't take into account the time value of money, which makes it not very well used. But it gives you a kind of an idea of how that might be used. You want to be able to know that net present value and internal rate of return are generally the preferred methods of capital budgeting analysis. And there are many, I can just tell you this, having worked with many firms before, that there are variations on these analysis that are being described here, but they all have the underpinnings of the basic parts of it are basically the same, no matter which one you choose. So there's just lots of different words and that are used to do this, but it's basically the same drill. And then ultimately you want to understand that the discount or cutoff rate is normally the cost of capital, which makes a lot of sense. It's explained well, but it's sort of the neutralizing factor in understanding what's involved with it. Again, the longer the payback of the project, the riskier it is, and that's reflected in the cost of it. So those are the things you look at. So the capital budgeting decision, again, it doesn't really matter what career path you're going to go on. You are going to, especially the higher up the food chain you go, and sorry for that, using that analogy, but But the higher up you go into organizational management, you find that it quickly starts to distill down to essentially finance and strategy, and you need to be well versed in both to present your ideas well. And so this capital budgeting decision, and some variation on what you might be reading about in this chapter, is likely going to be the kind of things that you need to do to get your projects moved forward within the organization. So anyway, it's well worth the effort to really understand what's going on here. Again, if you have any questions about it, certainly let me know. Or if you have any things you want to discuss about it, that's fine. Or if you want to discuss where you're at in the midterm, please reach out to me. Give me 3 times you can meet. I'm sure we can make one of them work. Okay? Best of luck, and let me know if you have any questions.